Morning. Yeah! Good morning. Yeah! Turn me up! All right, 4-minute warning. Oh, yeah. Yeah. Don't forget to fill out the poll. Wait, the mic was off? All right, let's do it this way then. Good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Ni hao ma. It's weird lighting. Anyways, good morning. Huh? Look okay? Look okay? What do you think? Huh? Anyways. Yeah, I'm joining a board for a local charity today. Yeah, so another board seat at another charity. Cool. Looking forward to it. This one is focused on young entrepreneurs. Yeah. Cool. So anyways, hey, what do you want to do today? Risk on, maybe? Risk off? Did you fill out the form? I don't like the way this is displaying. This camera bugs me every day, huh? And you're like, Wayne, nobody cares. Well, let me just try to get it so it's a little better. Is that a little better? Guess. Anywho, so we're going to look at the risk scores. We're going to look at the technical radars. We got retail sales coming out at 8:30. So we got a lot going on. And it's a little pastward looking, past backward looking. And so are the ISMs coming out this week. They're sort of a little bit war. Some of the war data's in there, some of it's not. And you're like, yeah. And now we're all trading maybe the resolution to the conflict with Iran or excursion. Cool. Nice haircut. Yeah. All right. Thank you. Appreciate it. So anyways, fundamentals, technicals, feel free to ask. By the way, my name is Wayne. I've been doing this a long time. 5,000 hours of YouTube videos. And before that, I was coaching. So anyway, so let me know how I can help. And yes, I love technicals, and I ain't too bad at them. I'm also pretty good at the fundamental side of macroeconomics. Cool. So let me know how I can help. I consider myself here as a representative of TRADARS, as a representative of Traders Way, as a servant leader, if you will, and I am here to serve you. I can lead us through the topics, but I want you, tell me, how can I help? Good morning, Wayne. Indices, NASI. Is it time to, you mean buy a dip? Well, what we talked about 3 months ago, and even farther out than that, is somewhere around April 1st, we want to be buyers of risk. Can anybody confirm that? It's important, not just for the newbies, but for yourself, because what you're doing is you're organizing your thoughts in a different part of your brain, and you're anchoring what you know, so that next time and next time after that, next time after that, you retain that knowledge. If you don't actively work on memory, not memorizing, but remembering, if you don't work on remembering certain things, what happens is your brain is designed to forget 99% of everything. So you have to actively anchor it in different parts of your brain. So even though I've asked this 10,000 times, do you remember? Will you remember that around April 1st, I'm interested in considering maybe buying risk? I'm open-minded a week, maybe 2 before, but usually about the 3rd week of March, and certainly in before the 3rd week of April, right? So there's that window. So if you have to have that, okay, Prince, you got to have that first. Is it time to buy NASDAQ? Well, if you're not already thinking that, then there's no answer, because, it can do anything. It could go up, it could go down. So what would I advise my charitable endowments is a great question, right? Let me log in. Boom, boom, boom. Boom, boom, boom. Boom, 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 boom. So that's why we need the data, right, Prince? Oh, sure, this time it doesn't play. It's been talking over me for days.
Good morning. Let us get you up to speed on the current shifting market dynamics as we head into the European session. I am observing a neutral but constructive risk environment as the U.S. 10-year yield retreats to 4.311%, a move that has provided significant breathing room for global equities. This downward pressure on yields has effectively weakened the U.S. dollar index to 99.46, allowing high beta currencies like the Aussie and Kiwi dollars to lead the recovery in the Forex space. biggest movers right now. Volatility index is down. High yield bonds, Nikkei 225, Ethereum, and NASDAQ 100 are up.
So Nikkei is up. In this case, you asked about NASI. Okay, NASDAQ's up. Is it a coincidence? Yeah, it might be. But it might not be. And so the way that you test your hypotheses is maybe start taking smaller trades that you plan on hanging on to longer. Smaller just in case you're wrong. But if you're right, you can build up over time. Because you want to enter these with as little risk as possible. But once again, if you don't know it's probably going to happen, then you don't know how to evaluate the opportunity. Is it a big opportunity? Is it a small opportunity? Is it a long-term opportunity? Is it a short-term opportunity? Well, if you don't know, you don't know. You just can't make decisions. You're helpless. A baby in a basket. You're just helpless. Anyways, we had a ripper day in the stock market yesterday. Yeah. Also, VIX dropped 18% and now is down 4% today. Okay. Greg says, I know you asked the question, risk on or risk off. Yeah. You're doing the same thing, but you're looking at volume. I'm looking at the reason volume goes up or down. Right? So you're looking at the speedometer. I'm looking at the gas pedal. Same thing, I guess. But yeah, I'd rather control the gas pedal than respond to the speedometer. But anyways, to each his own. So VIX was down 14% yesterday, I think, and now it's down another 4%. That's really good. You have to remember that VIX is, I think, the biggest component to our risk radar. So if VIX is dropped from 32 to 22, and basically, this week, scores are going to improve because we care about it a lot. Because it'll dictate on or risk on or off, volume high to the upside, volume down to the volume to the downside, right? High volume down or high volume up is going to be related to this. So, so Greg, you could use this just as much. I don't think you'll ever get divergence, right? So anyways, that's a huge one. Bitcoin back on. We were at 66 and then 67. Now we're at 68.5. I mean, dude, it's still cheap compared to what it was. I mean, it dropped 50%, right? So where's it going to be by the end of the year? So if you're like Prince is asking about NASDAQ, it's hard for me to answer. Like, are you talking about NASDAQ for the next 3 hours? Are you talking about the market open? You're going to scalp it? I'm thinking about NASDAQ for the next 15 to 20 years. Yeah, and I'm thinking about exposure to AI, the next new thing. And it's a big thing. It's equivalent to inventing the internet. Now the internet can think for itself. Now, keep in mind, we were talking about this yesterday a little bit. It might have been here, it might have been inside of our internal TRADARS.com live streams. But I had mentioned about the belief of automated farming. And so, we built the internet, which means we can connect humanity like a neural network, the history of humanity. And now we have the intelligence to analyze all of it, which is crazy. All known information being analyzed all the time by millions of different AIs, right? Okay, cool. Now, the other couple of things that are happening right now is battery technology. And in particular, if we go to a whole new process that we haven't even invented yet, but batteries are getting better. And this has really led the way from LED lighting to fully electric cars. And we're going to get to a constraint where lithium ion technology is just not good enough. And we'll come up with something even better. But think about it, where we can have energy and we can store it and use it very, very efficiently. And of course, I think even at some point, energy will become free because you won't have to drill it out of the ground, which is very expensive and takes amazing science. Okay, but the third part is the robots. So now if you can give knowledge, give a robot knowledge, you can give robots analytical power, not just knowledge, but thinking power. And you give it a good battery and it can walk around and do things while it's thinking and analyzing. You won't be an Uber driver, that's for sure. And right now, the average farmer in America is like 58 years old. Well, 100 years from now, they won't get old. They will amateurize. Yeah. Wowzer. So anyways, gold catching a bid, 48. Nice. And we finally got below $100 barrel. And that just happened, I don't know, an hour ago. Less than an hour ago. We were stuck at 100. 2 hours ago, we were still above 100. Yeah. So we're below 99, going in the right direction. Dollar weakening. Yields are falling. This is good. And that's why you get to the risk radar going, oh my God, we got positive numbers. Shut the back door. Things are just horrible. Not no more. Look how bad things were 2 weeks ago. Now we're up here. Let's get an update on headlines.
Investing Live European Markets Wrap. Beginning of the end to the U.S.-Iran war. FTSE 100 up over 2% on all-round buying.
Equities. AI-driven support with regional tilts. HSBC. ISM manufacturing PMI expected to remain stable in March.
Gold price forecast. Gold US dollar rallies further with the 5,000 level on focus.
Yeah!
Oil. Prices retreat on de-escalation hopes. BNY.
Greece factory growth hits 7-month high.
QTI Pares half of early losses. Recovers to near $96 as oil supply risks remain intact.
Yeah, I cheer for gold. I do need gold to go up. I think, I can't remember, it's 5% or maybe 8% of my retirement account is gold. Yes, as a hedge, in particular as a dollar hedge, not necessarily as a risk hedge.
United States ADP employment change above expectations.
Yay!
40K in March. Actual 62K.
Very good. Thank you, ADP. 62 ain't bad. Now, I don't really care about non-farm payrolls headline number on Friday, but I am very interested in the unemployment number. And I don't expect it to change, and therefore we can talk about that on Friday, about the impact of monetary policy. But anyways, like I was saying, I got a lot of money in gold, and it's in my retirement account, so it's a long-term hedge against my dollar exposure, because my charities and my retirement account are domestic here in the United States, and so I don't. I try to remove
March ADP employment plus Nikkei 2K versus plus 40K expected. The markets continue their positive progression with stocks higher, oil yields, your US dollar lower.
So in those accounts, I try to reduce as much risk as possible, and there's different types of risk. One of them is foreign exchange risk, right? So if I start investing into MSCI, let's say, so global stock markets, well, inevitably, either directly or indirectly, I'm facing foreign exchange risk. And that's just one extra risk. I could say, well, I can give up the risk. I won't have exposure internationally, but I'll be exposed or invested into assets that are in dollars, right? And gold being one of them. But then I take the gold and then I run an option strategy over it so that the gold now pays 12% a year.
Breaking ADP employment change rose by 62K in March.
Yeah, so gold going up is good for me because I own the asset. Meanwhile, running a derivative strategy, I'm earning 12% a year in income, 1% a month. It's pretty good. I mean, as a Forex trader, I'm happy with 2% a month. But that takes a lot of work. If I can get 1% a month and do nothing but a derivative strategy, which isn't that complicated, then you're like, oh, well, nice. So anyway, so that's why I cheered when that went up. Bum, 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 bum. Everything. I guess it's not everything, but yeah, pretty much. Is that how you read this? So what's happened? And it looks like some of the scores have changed, which is pretty good because we're in a new month and we have new seasonality and such. But things need to rotate around. So imagine we're in a trough. This is really what Prince is asking about, right? When he asked about what about NASDAQ. I think this is what he's asking about. This idea that NASDAQ's been down and now it's up. So that would be a trough. At some point, there'll be some ups and downs likely. But, we bottom out and then we start heading higher, right? So if you're looking at this, you're going to see more unexpected because it's still looking backwards. So in a weird way, this confirms that we might be in a trough. Dive in here. NASI up, still unexpected. So what we want to do is, and I think NASDAQ, I guess it was about the same. It was 4 something yesterday. But I expect to see it move left to right in the matrix score as seasonality kicks in. But also remember, part of what it's doing to get the quant matrix score is some technical analysis. It does 2 things. It looks at trend and it looks at momentum. And I can explain the math to you if you need, but whatever. Longer term versus shorter term. How about that? Yeah. So as the chart on NASDAQ becomes, or if it becomes more bullish, 20%, I think approximately 20% of this score, which is currently negative 4.61, will move this way. Also, as seasonality kicks in, and it's not just monthly, but weekly inside of the monthly seasonality. And it's also not just what it does in April, but April over 5 years, April over 10 years, April over 20 years, and the exponential moving average of the 20 years. And we put all that into there. So I would expect this is going to move this way, and then it moves more to the bullish as expected quadrant versus bullish unexpected. But remember, it's still analyzing that NASDAQ has been falling, therefore, and Dow and DAX. And during that period, the seasonality was also congruent with down. Now he has to think up around the other way. Now, I'm already doing that, and that's why I'm sharing it with you, where Prince is like, well, is this time for NASI? If you think about it, which then you need seasonality, but if you think about it, up and unexpected is what you're looking for. I did call it the contrarian radar. I didn't call it the trend radar because if it's over here, it's already doing it. What, do you need special tools to figure out something's going up? No, look at it, right? In this case, you have to say, well, relative to, right? Relative to what has been happening, what's the importance or magnitude of the right now? So Aiden's looking at it. Most things he doesn't care about. But right now he's saying, look, okay, maybe, okay, there's two things. He's saying, based on it being high, normally you would want to sell the rip, as it says here. In particular, if you're bearish and you don't think it's over and you think the war is going to continue and all of that kind of stuff. Or we've just broken a bottom. That's how you want to look at this thing. What do we see here? Okay. Dollar pairs are up. In this case, US dollar is weak. That's good. Yen is weak. That is good. So yen was strong recently, not really because of risk off, but because yen got weak because Japan had to buy more. It required more Japanese yen to buy the same amount of energy. So just imagine the volume, or really, it's not the volume. I'm not talking about the swimming pool of water. I'm talking about the garden hose filling the swimming pool. So the garden hose had twice as much water coming out. Okay, that's a lot of water. So the velocity of yen entering into the interbanking system was weakening the yen. And that means it's exponential because if your yen is weaker, you need more yen to buy oil, but because you're spending so much yen on oil, it weakens yen further. So the next time you buy oil, which is the next day, you need even more, and then you need even more, and it's exponential. So the Bank of Japan was talking about, hey, we need to intervene. We need to do something, even if it's artificial, even if it's temporary, even if it's just during the war. We need to do something to make this yen strong. And so for a little bit here, a week to 10 days, you saw some strong yen. And then all of a sudden, boom, maybe the conflict is over. Boom, yen's weak again. Because there's no need to intervene. If the resolution is there, then you can just ride it out. And we go back to exponentially weaker yen. If you think that way, I don't know if you think that way. You might disagree with me. It's totally fine. I don't know. I'm not reading a script. You know, this is what I'm thinking. This is my analysis. Okay. And you can see the size of some of these divergents are quite high. So you can read them as opportunities to be the contrarian and sell these high and buy these low. I would say because it's the beginning of a new quarter, you may not want that. You should see that the market is being contrarian. What was is no longer. Yeah. Hang on. I got to crank up the AC. Hang on. All right, we're 1 minute away from the news. I think we are, aren't we? You can go here. So here's FX Street just wrote an article, and I don't know if I agree with it. In fact, I think I disagree with it.
Spike alert, 1 minute until United States retail sales ex autos is released.
Nice! Shut the back door! Cut it close, though, huh? I'll have to ask Aiden why it took 30 seconds to launch a 1 minute warning. Oh, look at that. Look at that. There's an option. Aiden did that. Thank you, Aiden. Now, is he going to pull the data? I don't know. I haven't been focused on that. So funny that he put this here. So it didn't really work either, but there's a feature on both of these to say, I only want the big one, or I only want the little one, or I want both. Yeah. So it looks like he's not fetching it. This has been a struggle, but I haven't been focused on it for a bit. But we'll get it worked out, I'm sure. Because what it's supposed to do as soon as it comes out, he's logging into the government agency, pulling the data and posting it, but for some reason, nope. Doesn't matter. You can get the news yourself. Maybe you can watch it on Bloomberg, but you'll see all of a sudden, boom, 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 the data is going to be rolling in.
United States Retail Sales Control Group increased to 0.5% in February from previous 0.3%.
United States retail sales ex autos, MOM, above forecasts 0.3%. In February, actual 0.5%.
BOJ, rate hike prospects supported by solid sentiment. ENG,
Breaking ADP employment change rose by 62K in March. U.S. March ADP employment plus Niski 2K versus plus 40K expected. United States ADP employment change above expectations. 40K in March. Actual 62K. The markets continue their positive progression with stocks higher, oil yields, your U.S. dollar lower. Investing Live European markets wrap. Beginning of the end to the U.S.-Iran war.
United States retail sales, year over year, increased to 3.7% in February from previous 3.2%. U.S. February retail sales plus 0.6% versus plus 0.8% expected.
Cool. Oh, and then this updated. The next one. Okay, this loaded the previous and forecast. That's good. So in 57 minutes, we have Canadian PMI, manufacturing PMI. Cool.
Fed's barking. Inflation expectations not at risk of breaking out. Reuters.
I hope you guys like this free Squawk Box. Most people with the Squawk Box have to pay money. Actually, I pay money. This is actually very expensive to build, but it's also very expensive to run. So I hope you like it and I hope you use it. I think we've been running it a year now. It's a long time to run something for free. Cost me, I don't know. We'll just say a lot. I could probably buy a used car. Right. Yeah. So it is something that I'm quite pleased with. So while I'm trading and while I'm
Bowie Bailey, we will need to act if appropriate.
He didn't know how to pronounce appropriate. Anyways. So even while I'm trading and working on on TRADARS, I'm sitting on this page, I'm listening to Bloomberg, I got the squawk running, and it makes me happy. Is that right? Yeah, email me again. You're probably on like an old Quant Box deal or something from a million years ago and you never shifted over. That might be it. So we could work on that. But probably the easiest or probably important thing for you to do is oops, I'm back here. Is just let's get you on a new subscription. Yeah, let's get you hooked up properly instead of duct taped, right? There's a lot of duct taping from old memberships. So probably the best thing is, cut the duct tape and just get you to sign up. Now, if you're like, well, but I was paying a different price for a different thing and I should have this and I should have that, well, then let me know, email me, and I'll create some sort of coupon code to get you what I promised you, Yeah. So I just noticed all the indice charts have just bailed out.
Bank of England's Bailey. I still think markets are getting ahead of themselves by pricing rate hikes.
See? So, yeah. Boom, 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 boom. So these are day trade charts. 15-minute candles. We're doing technical analysis, although I'm not sure he's doing it properly in here, this part. He's doing it. He's just not updating the label. So there's technical analysis. This is statistical analysis on 3 time frames. And then this is fundamental analysis. Isn't that cool? So this one, fundamentals, macroeconomics, and it's comparing the United States to Japan. Then we look at 3 different time frames and analyze the statistical mean and the slope of the mean. So the trend on 3 time frames, mathematically. And then the chart, we're looking at things like moving averages and MACD and pivot points and that kind of thing. So when you're looking at these things, cool, man. There's a lot of analysis. And if you want to focus, you can say, well, just show me euro pairs because you're interested in euro pairs. Or just show me yen pairs today. Okay? That kind of thing. And you can very quickly eyeball. Or, of course, you can just say, give it to me, baby. Okay? And you can just go through, look how quickly it is for you to go through all your charts.
I just noticed he's done something. So I spent quite a bit of time recently over the weekend adding crosspairs for you. And we had a crosspair tab. But all he did was add the crosspairs to each instead of keeping the... See, I didn't tell him get rid of crosspairs. He just did it himself. That's what I would ask for. So I kind of like the idea of like, show me all the currency pairs that don't have a dollar, a Swiss franc, or a yen on. So therefore, I can just look at EuroCAD, and I wouldn't see these. So I'll have to get into that. So we have Euro Aussie, Euro Kiwi, Euro Pound. We didn't have that before. Looks like the charts are drawing appropriately. The space between the 2155 is red when it's 21's below. Then it turns green when it's above. Green, green, red. And they haven't crossed yet. Okay, good. That's good. That's good. This is working very well. And they're loading very quickly. Good. One of the things I want to share with you is don't just do the technicals. Look at the statistical trend. So pound yen does not look good. Pound dollar, mediocre. Pound Aussie, better. Euro pound down, better. Pound CAD up. Okay, look, see, I'm looking at the linear. I'm looking at future here. Okay, it's showing you worst, base, and best case scenarios coming up into the future. Yeah. So we're at 185.86 on our way to 186.20. This is all for today. We also have swing and position trading, right? Yeah. Crypto yesterday was quite bad. Solana getting crushed. Polkadot doing all right. Hopeful. That looks like a buy a dip. This Ripple looks flat, so pass on the XRP. Cardano, mediocre. I mean, it's slightly bullish. Lots of vol baked into this. You don't want too much vol. You want a tighter cone because it shows you more reliable, because the difference between the spread between the worst case scenario and the best case scenario is narrowed because there's sort of like less unknown volatility, less bad volatility, more good volatility. Like, wait, that doesn't make sense. Okay, well, trust me then. So, not good, maybe. Not good at all. Maybe it's a glitch. Maybe the chart's not drawing right, but that is just not good for anybody. And that's, no, not really. Yeah. Okay. Stock indices. Okay. I hope you guys like the projections. Now that one's not drawing, which is interesting. And I noticed a couple of other stock indices not drawing. That's a dollar index. Okay, that's obviously not correct. This one I also doubt it. It's missing past data, so it spiked and came down. All right, this one looks correct. FTSE looks correct. Still statistically bearish. Nikkei, statistically bearish. Nazi, look at that. So Prince was asking, is today the day where Nazi goes up? Well, on a 15-minute chart, we made a higher high. We made a higher low into the moving averages. After a 2155 cross, my book, if you look in the book about how I trade, you know that that's a buy for me. And statistically, it's confirmed that it's buyable. Now,
the linear progression isn't based on what my opinion would be. Like my opinion would be that's a double bottom, that's a higher high. You want to buy a higher low, maybe on a roll reversal, maybe on a fib, maybe at a daily pivot, maybe at the moving averages, but maybe, baby, buy the frickin' dip. Cool. Now, that's my opinion. That's me sitting around for 100,000 hours trading, and I tend to do all right in those situations, especially if I was already sitting around going, NASDAQ's down, but I think it's going to go up. Is it going up now? No. Is it going up? No. Is it going up now? No. Is it going up now? No. And I'm doing this all week. Is it going up now? No. Is it going up now? No. Is it going up now? Yes. Double bottom, higher high. Great. What do I want to do? Buy the next dip. Okay. But then the next part is if you measure the price action. Again, similar to implied volatility. Yeah, we're heading up, brother. Yeah. Pump up the volume, pump up the volume. Cool. And then, of course, we can swing, which is 4-hour candles. That's probably a glitch. Silver looks correct. Natty, wow. American Nat Gas. Oof. Platinum corn. Interesting. Looks like maybe a change in direction of corn. Change in direction of soybeans. Cool. No oil though, huh? Where's my oil? Okay, I'll have to yell at Aiden for that. And then for those that are actually planning out, dare I say, planning out the next quarter, you should be looking at these charts. Okay? For example, dollar yen is flat again. Well, that makes sense to me because that would be normal for me. What about euro dollar? What about pound dollar? Let's pick one. Okay. Now, one of the things I need to do is work on the X and Y axes, the way that it displays this, but the information's here. The dotted lines that are probably the thing that's making the way that it's zooming and skewing everything. It's trying to fit all this in, so I'll work on it, but just pay attention to the data. It's looking at April's pivot points. You see that? Because one of the things it's looking at is confluence. So it already sees there's a confluence, okay? Yearly M3 with monthly M4. Cool, right? Yeah. So Aiden is actually looking at monthly pivots and annual pivots. I think what I'll do is say, don't draw the monthly pivots, just draw the annual because, well, you just need to know, Aiden. You can tell us over here, but if this screws up the chart, don't draw them, okay? But just know that he's doing it. My point is, if we look at things like seasonality and COT and our confidence scores, okay, we have a bullish trend intact, right? And buy dips near the 2155, the dynamic buy zone. Okay, so again, I know we need to zoom, stretch this so you can see it. I can't do it, but I'll get it. It's not the highest priority, but I'll get it. I'll get there. What it's trying to say is, okay, if over the next 3 months you think pound dollar up, and in particular by the end of the year, pound dollar up, and I don't know if you love pound or hate dollar, but somehow you made a decision. Then
if that is true, then we are on our way up here. Okay. And we're projected to be at 135.86 out into the future. Cool. Although I just noticed this is old. All right, my bad. I just did an audit. I had AI do the audit, and the AI told me it was right. Well, look, I'm a trader, and I'm like, brother, that ain't right. So let me work on that. We need these to be accurate. Yeah, but they're drawing. So I built the database so we have the data. Then we built the charts, and then we link them together to create the charts. And then he was struggling with doing the charts properly because it's actually incredibly complicated. Because they're not just price and time charts, which update constantly, like every 5 minutes. That's a lot of data. And then you got to store the data so you have the history, okay, which is also complicated. And we're not licensing some chart software. We're actually building this, right? Okay, and then you have to teach it how to do moving averages, but it's also doing linear projection, standard deviation, MACD, and pulling fundamental bias, technical bias, statistical bias, putting them all together, and then being able to do bigger and smaller views and pulling all this other data. It's extraordinarily complicated. So what happened was, so we built all the data, we built all the front end. I taught Aiden how to trade properly. He can do all of this, but then it was so complicated. And I've mentioned this before. We were using so much compute that we couldn't get enough NVIDIA servers from the data farm, from the server farms. So one of the things I've been doing the last month is redesigning the back end. And so here's my lame bullshit excuse now. It doesn't work, but it loads quickly. Yeah. So anyway, so I got the efficiency back. And so, okay, so now it's super fast. It's super efficient. It's super stable. Everything's drawing properly. Everything's good because they used to draw inconsistently. And so I fixed all of that. And now I got to go back and hook up the data properly. I was told it was, but you know, AI is either stupid or it'll lie straight to your face. I've literally typed in, Aiden, that's bullshit. And then he's like, yeah, you're right. So anyways, we're so close. Anyways, so you can see how reliable and awesome this is or can be. So again, let me go back. We're in the position trading radar. We're looking at daily candles, yearly pivot points, and monthly pivot points, and the statistical trend, and the charts, and the fundamentals. And you can take all of this and plan, let's say, April, May, June. You can plan the entire second quarter. Dude, tell me that's amazing. Tell me you're going to use this. Tell me that you're going to use this to make better, more informed, longer term decisions. Tell me that you're going to be better at setting up your trades and letting your winners run. That's what I want you to be able to do. Have the data to build confidence, but then have the confidence to let your winners run. And not be afraid all the time. That's what I want you to tell. Cool.
So, yeah. So I guess what could we
Good
do?
morning, Aiden here. Let us get you up to speed on the shifting macro landscape.
We can go to our charts here. Let's go to longer term. Okay. Dollar weakening off of our resistance that we've identified a year ago. Exactly a year ago. So this year, dollar's gone straight up. So you want to look at it like this way. And now we hit that target right at the end of the first quarter. We believe, based on our seasonality, that somewhere around April 1st, dollar weakens. So again, I don't know if this is because of the war or this is just what dollar does. But that's the plan, Stan. Okay. And look at this. From the first, let me try to get this a little bit. From the first day of January to the last day of March, dollar was relatively strong, which is completely normal. Because I have 20 years of data that can prove it. And now what I'm thinking is, this could drop. Yeah. It could, couldn't it? And line up with the bigger move. The super cycle, if you will. Well, I don't know. Are you, is this what you're thinking? Is this what you do? What do you do? So that's what I'm thinking. I don't know. What if? That's called a hypothesis. Well, in that case, I would want to sell dollar and buy something else. What could I buy, everybody, if I want to sell dollar for the next 3 months? Well, we have a predict the future tool. Did you know that? We have a predict the future tool. It's called analysis. We can predict it. I don't know what it is. I don't know what the future is going to be. Okay. What happens when the Fed analysis of higher inflation potentially came? Yeah, well, that is what's happening. That is the situation we're in. But all that has happened a month ago, 5 weeks ago. All that money has been, we're already not in that trade anymore. That trade is being unwound. All right, let me show you as an example. What if you had a crystal ball that looked backwards as well as forward? Oh, shut the back door. Okay, so it understands all the history, but it predicts the future. Now remember, prediction is by no means a guarantee. It's just a model, and all models suck unless they kind of work. Sometimes they kind of work. Okay, but it's not random and it's not guessing. How about that? It is mathematical. And you had such crystal ball for S&P 500, NASDAQ, DAX, FTSE, VIX, WTI, Brent, gold, silver, dollar, index, euro, dollar, pound, dollar, Bitcoin, Ethereum, Solana, yields. Like, dude, okay? And you had a crystal ball. And you're asking questions like what Prince was. Is this the bottom for NASDAQ? Well, okay, let me show you what I think. If you're looking at S&P 500, now, to answer Prince's question, all I have to do is click there. So Prince, right? If you're not a subscriber, pay the money, and your question will be answered in seconds. If you are a subscriber, click there. All right, so let's look. Let's pretend Prince said, is this the bottom for S&P 500? Well, I can tell you statistically, recently, the bottom occurs somewhere in April. So it's a 100% maybe. But historically, it happens at the end of March. What? So, okay, the colored ones are the 5-year average, the dotted one. So if we're going to use the dotted one, and I hate that modal, I'll get rid of that. Look at the dotted line on this chart. Maybe it'll show it there. Anyways, look at the dotted. I want to point. Oh, I can draw it. I can use my handy dandy drawing tool. Duh. All right. Look at this line. Somewhere in March, over the last 10 years, 20 years, and an EMA of the 20 years, including the 5-year, somewhere in March, S&P 500 bottoms out. That's what it says. Is that my opinion? No, it's math. Cool. So over on right, here's our future forecast. So when you hear people on Bloomberg and CNBC or at conferences doing their predictions, some of them are using really good numbers. Some of them are just using bullshit opinions. They have no idea what they're freaking talking about. And it's usually pretty clear, or very early, that they're just guessing, which is dangerous. You should never, your opinion shouldn't be on what you think. Your human brain is not very good at that because we're incredibly emotional. It's a survival skill. So we're afraid the worst is going to happen. And then when things are good, we think we're going to be rich forever. Whatever. Okay, we're not good. So I like to use lots and lots and lots and lots of different analytics and build a neural network to analyze the relationships between all these different data sets that mean different things. So we're looking at correlation of assets, not the theoretical 20-year, but over the last 90 days, how have all the assets been moving relative to each other? But that means they're moving based on sentiment. Things like the war and a tweet. Well, that gets calculated in there. Then we look at the bigger picture. What is normal so that we can understand and analyze the sentiment of what's happening right now, which may be normal, may be abnormal. And then we can look at charts and we can look at the fundamentals and we can do comparative analysis of Europe versus Japan and decide the likely direction of the flow of capital. And then we can do this and we can do that. And we can do this and we can do that. And it's just massive amounts of data. Versus our opinions are general at best assumptions or hopes and wishes at worst. And so anyways, doing this, close to neural network, I mean, it's so much data going into this. This is what we think at TRADARS, aka Aiden. And quite literally inside of Aiden's brain is to use all this data, technically fundamental, sentimental, historical, and relational. Literally in the code it says, what would Wayne think? What would Wayne do? And I've taught him that. So now there's the lens and filter. Because trust me, my testing of things like ChatGPT, it's so generic, it's wrong. And it's been programmed with the same mistakes that you used to make or are still making. Rules of thumb. Buy gold after inflation has peaked. Why don't you buy gold before inflation shows up? Okay? Stuff like that, like wives' tales, misinformation, wrong interpretation. That's all in ChatGPT because that's what humans think. Well, if it worked, most people would be successful in trading and investing because it's so obvious and so easy and straightforward. Inflation's high, you should buy gold. Yeah, well, people did that when inflation was 8%, but it used to be 10%. They're still buying gold, and gold collapsed. Then gold drops 1,000. Nobody wants to own gold anymore. Now it's going to start going up. So anyways, we know it doesn't work. Okay. So anyways, going into here, NASDAQ has been down. January, February, March. This is actually what happened. Cool. It looks terrible. So pure statistics would tell you this is likely to continue falling forever, right? If it was the trend radar, that's why we look at smaller time frames with trade. We look back a week, a day, and 4 hours on the trend, right? If we're going to plan the year, that trend analysis isn't good because, as I've explained, it's a mathematical or statistical formula that calculates the slope of a mean, the variance from the mean, standardized, and then linear projected out on 3 time frames. Easy. Well, you can't do that here to predict the whole year because then you'd say, well, S&P 500 is going to go to 0. All right. So now we take that and we filter it through our neural network. Wouldn't you like to have a neural network? Hey, kick down, come clean. Don't be a holdout machine. Pay the money. Check this out. Yeah, it's been down. Yeah, and then it's going to go up, and then it's going to fizzle, and then it's going to go up, and then we're going to slide for 3 months, and then at the end of the year, up, 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 and we're going to close. Okay, base case. Base case. Base case. 7,200. What? Best case, 7,936. Now, if you can't plan like that, oh, well, then you should probably get TRADARS. Okay? Remember that, right? Remember, it's only doing analysis of everything. That's it. Trying to align things up. So it's, let's say, better, Greg, than just pure volume. Now, the pure volume that Greg uses works. Like, I'm not disagreeing with what Greg does. What I'm saying is, before the volume shows up, institutional and professional investors
are doing what TRADARS is doing. The only thing is they spend millions of dollars to get this data, not a couple $100 a month. And then you see the volume. So maybe, Greg, the benefit is maybe you see the potential in the volume a few hours or a day before it occurs, or because of seasonality, you can anticipate the increase or decrease in volume even weeks before the increase or decrease, so you're ready for it. And you can anticipate and then recognize and maybe have more confidence in trading that volume or being ready before the volume, or take smaller trades in anticipation of the volume increasing. And then when it does, it's confirmed you're already in and you're riding a wave and you're adding some more. But you can see, I hope, the value of knowing that it is probably going to happen. You don't know, but when you've set up an ambush and you're waiting for the volume and all of a sudden, boom, spike in volume, dude, there it is, ambushed. You already have the place booby-trapped. You've already taken the high ground. You already have taken crossfire positions. Huh? You've scoped the place out for your mortars. Like, dude, not even a fair fight. The volume shows up. You have an 8-step execution plan. Buy this, buy this, buy this, buy this, buy this. Sell that, sell that, sell that. Boom, boom, boom. Okay? And when you have that level of confidence, you're likely to place a better value on the opportunity. And sometimes you want to make 8 trades. Sometimes you want to make 2 trades. But when you're right, you're going to be righter. And when you're wrong, it's not that bad. And, so anyways. Okay, let's end it. Get an update on headlines, and then we'll get a sit rep, and then we'll call it a day.
Euro US dollar price forecast. Timid buying as sentiment improves.
The US dollar Swiss franc moves from a higher trend line to a lower trend line, testing key support. Brazil S&P Global Manufacturing PMI climbed from previous 47.3 to 49 in March. ESM Manufacturing PMI expected to hold steady as sector shows resilience. U.S. President Trump. Iran's new regime president asked for a ceasefire.
Oil. War risk keeps prices elevated. Rabobank. Hong Kong retail sales growth strongest since June 2023.
U.S. retail sales rise 0.6% to $738.4 billion in February. So I hope you understand the purpose here. While you're trading, you can open this page, go to your charts, just burn through your charts. Fed's Musalem. Monetary policy should hold in place for some time. And you can hear the news as you're trading. So that while you're trading, you're not even looking at the news or anything. You're able to hear that Trump has suggested that a ceasefire has been requested. You think this could impact dollar or oil? And that's pretty powerful. Oh, check this out. Boop, 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 boop. That could be interesting. So if that's the case, and we're buyers today, make sure you update your pivots. South Africa total new vehicle sales rose from previous 53455 to 58060 in March. Yen. Energy shock impact seen more contained. MUFG. So we're bears on US dollar right now. If we're really wrapping up this war, ceasefires tend to wrap up wars. Usually need 9 ceasefires before it wraps up, but whatever. And so we want to be focused on this. Like, this old trade was based on the risk off. That ain't likely to be happening, so we got to change this. And I'm going to put it yearly, because I usually don't trade USD yen because they're usually similar. Okay. Dollar CAD. Hey, oil prices falling. Okay. The windfall for Canada might be over. It was fun while it lasted. Look at the top too. That's amazing, huh? So now what? Well, maybe we resume our way back around as things normalize. I don't know. But you could be going, so your routine is you go through TRADARS, you create a little list of assets you're interested in, and then you can go to your charts and run the squawk box in the background.
Fed's Muzalim, U.S. monetary policy well-positioned and should hold for some time.
And never take your eyes off the charts. Okay. Cool. And you build your way into positions. So here's 5 trades. I did yesterday. So anyways, that's the power, and that squawk box is free, bro. Tradars.com. The platform I'm using is the Trader's Way MT4. I have these charts, like you could have this chart as one example. And then you're like, well, what about annual? So then I can go here. Okay. You can have that chart. In fact, you can have all these templates. Okay. You can have them all. I'm going to, right? And they work on the Trader's Way MT4, and I have MT5 versions, and I need to move over to the MT5, so probably we'll do that later this year. You can have those as well. I just don't have them.
Trump going to be out of Iran pretty quickly.
I don't have them in tradars.com right now, but I will. Yeah, I have the capability. Oh, I have the power. Yeah, forget my board meeting. I got to go. I got a charitable board meeting. Story of my life. Take me home. I drive all night. Keep a woman's tongue. Right? So anyways. So what I'm trying to get at is, what's my trade plan? Okay, that's my trade plan. Okay, do you know what is interesting? I was in this trade. You guys remember that? I was in this trade for about 9 months, I think it was. So actually, I was short from here. I was in this trade, got knocked out, and now I'm back in. Cool. Looks like I still have a sell up here. I guess I better get rid of it, not so I don't forget. Cool. So now I'm back in. I'm back, and I got a bigger gap. Oh, don't. That's not what I meant to do. going on? Didn't mean to move my stuff. Trying to do this. So now this is my new plan. And for that, I need seasonality. And for that, I need risk on. And for that, I need an end to the war. And if I get all that,
Trump will seriously consider our withdrawal from NATO in today's speech.
I get paid every day because those 5 trades, let's say I turn them into 50 trades. Every single one of those trades pays me cash every day. Doesn't matter if the market goes up or down. I just have to stay in the trade. So I'd love to get 50 trades open, maybe 100, maybe 1,000, and have every single one of those trades at break even. And then sit on it like Mother Goose that lays the golden egg. Every day at 5 p.m. rollover, money comes out of my golden egg. Gross. It's getting gross now. Yeah. Huh? Anyways, loving life, living large. Thank you for being in my life. Thank you for being in my team. Thank you for your loyalty and the respect you show me every day. This is a tough gig, and I like doing this gig with you. I appreciate your professionalism and your patience. I know it's not perfect, but we're getting very, very, very close. You see how fast those charts loaded today? Oh, my God, the hard work is done. Paradise is around the corner. So anyways, if you're not using TRADARS, why not? It's free. Come on. Good. Let's go. Even if you just want to check it out. Check it out. Let's go. You're going to find for free, there's a boatload of stuff. Like, you are going to be shocked what I give you for free. There are other services that charge, let's say, $100 or more that give you less than what I give you for free. Why? Because I already built it. So I share it because I'm a badass. Right? So if you want a badass on your team, hire me for free. Click thumbs up, like, leave comments. Do all that stuff. Tell YouTube this is great because I don't know why this is what everybody says on YouTube. Whatever. Peace on earth. May the pips be with you. May your profits be above average. Hey, that just happened.